And the biggest one that came in yesterday was Asian Paints, the incumbent, showing who the true leader is. And let's go straight across to the management of Asian Paints. Amit Syngle, the MD and CEO. I spoke to him this morning and I began by asking him about, more importantly, the growth that they see going ahead along with the quarter that went by.
The elements of our strategy were very clearly in place in terms of what we wanted to do. There was a clear focus in terms of looking at execution, the focus with respect to our brand building, and a lot of skew of regional initiatives in terms of what we really put in the market, which possibly gave us the right direction in terms of looking at the entire product range so that we could get a good volume growth in this season, because the demand conditions were still a little bit benign in terms of what we saw. And therefore, it had to be an effort in terms of more moving the market from our side in terms of that what we looked at. Not only this, we looked at the B2B business also giving us a flavor of growth, and that overall added us, giving us a strong growth in terms of what we've been able to deliver this quarter.
So do you think this sustains? Because that's the obvious question, right? Asian Paints has turned a corner from what it was over the last 6 to 8 quarters, at least when it comes to volume growth. Do you think this is a one-off, or do you think this is the start of a continuous series of double-digit volume growth led by you?
So overall, the endeavor and the focus is very clear that we would like to be in the zone closer to the double digit from a point of view of volume in terms of going forward. As we look at going in the further quarters, our endeavor is from a point of view of looking at fine-tuning our strategies, looking at working in the markets, driving the ROI of the retailers, looking at differential measures with respect to new products, newer strategies which we can bring in so that we can get the share of the business far more strongly. We are also targeting in terms of a huge slew of marketing efforts which kind of go in, and this marketing efforts are focusing with respect to regionalization a lot in terms of going forward. So we feel that today what we are endeavoring to go forward is to kind of really see that, irrespective of the demand conditions, we are able to make a mark in terms of going forward.
All right, so that sounds good. High single-digit to low double-digit volume growth aspiration is something that continues over the next few quarters. What about the value growth? Because this time around as well, while your volumes grew by about 11%, the value grew just about 6.3%. Earlier, the volume-value gap was much wider. It's become a little narrower now. So what do you make of the product mix, and what's the outlook from here on?
So, as I said, I think as part of the strategies, there was a lot of focus in terms of improving the product mix. We focused a lot much on the premium and the luxury categories, and that is something where we got a lot of success in terms of looking at really improving that share of business in terms of going, which has helped us in terms of increasing the value in terms of what we deliver and decreasing the volume value gap, which we were seeing. We also kind of looked at higher growth categories with respect to our waterproofing wood finishes business, which also gave us this kind of a difference in terms of the volume and value came in. The other focus was clearly that from a point of view of B2B business, we strongly looked at the government and the factories business, and there we concentrated in terms of specialized products which are higher in value. So the whole focus was to kind of really see that the value delivery is on a higher side so that we could kind of really look at, correcting this gap between the value and the volume to that extent in terms of what we have delivered in the past.
A slew of backward integration, measures that you had earlier announced are now coming to the fore. A lot of these plants are now, coming on stream. So what is the expected benefit that you will get on your gross margins because of this? Will that be reinvested into building your, front end because of that? And to that extent, what's the kind of EBITDA margin that the street should work with?
So we have, as we have announced, we have started our white cement plant in Fujairah in Dubai, and that is something which we have ramped up the capacity as well, so that we are able to work on 90 to 95% kind of a capacity which we are able to do. This will definitely kind of give us some better margins in terms of certain categories of products which we are dealing with in the market. To that extent, we have the VAM-VAE plant where we are looking at commissioning of the VAE part of the plant in the first quarter of next year. So as we see that some of these realizations will get to us in the, the quarter 2, quarter 3 of next year, to that extent, where we will see that from the possibly the, the whole area of margins which are coming to us. How do we really deploy it? We want to really strengthen the whole area of brand going further, and we also want to kind of really see that how do we kind of get into the best of the technologies, increase our footprint, and really leverage the strengths of Asian Paints very, very strongly. So I think that is an ongoing goal, and that is why these investments were made, so that we have enough arsenal in hand to kind of really pursue the strategy which we are kind of going to take.
So how should we look at margins then? You know, you have been guiding for 18 to 20%. Given the current conditions, given the investments that you're making, do you think it's more 17 to 18% than 18 to 20%? And even if it's 18 to 20% that you hold, it will be more 18 than 20.
So overall, when you look at the standalone business, the PBDIT margins are about 18.5. The console is standing at about 17.7 in terms of what we look. And both of these PBDIT margins have gone up quarter on quarter and the preceding quarter as well to that extent. So we feel that we are confident that we should be able to retain the range towards more 18 to 19 kind of a zone within the band of 18 to 20 in terms of going forward.
Take that point. And now, you know, everyone's been talking about whether competitive intensity has reduced, whether it has increased, whether it will sustain. What have your thoughts been? Because, you know, you've seen 4 quarters of the disruptor who's obviously now almost become an incumbent. What has, you know, the street told you, your feedback coming in from the feet on street?
So overall, what we feel is that the competitive intensity is still very, very high because of the fact that the overall demand conditions have been benign. They have not kind of given us any shoots or sparks in the market in a very big way. This is true across rural and urban centers to that extent. And therefore, every competitor existing as well as new, they are trying their bit in terms of maximizing the game in terms of what we're there. So we feel that the competitive intensity is going to remain to that extent, but we have to be very clear that today, any competition which has now into their second or the third years, to that extent they will start feeling the heat because of the fact that there's a certain base in terms of what they are working with to that extent. So the low hanging fruits are gone overall in terms of what we see. And I think it is also a composition of the fact that whether you are talking of sustainable strategies which go into the future, are you really looking at building the brand in a very strong way? Because as we see it today, this is an industry where it is not like FMCG purely, where possibly, you know, you do something, you get an immediate response and you sustain the response in terms of going forward to that extent. It is an industry which requires continuous investment. It requires persistence. It requires a lot of patience to that extent in terms of doing that. And that is something which possibly remains to be seen in terms of how possibly competition behaves as they go forward.
Could the CCI issue throw a spanner in the works for you?
Yeah, I think we have been, you know, in the earlier case as well, fully cooperated with CCI, and that is something which we are looking at fully cooperating, because this is now part of the business in terms of saying some of these things which will keep on coming up. We are very clear that we follow a certain code of conduct. We have a certain competition policy, and we are very clear that today we are open in terms of sharing anything which possibly the CCI requires for us to share.
All right, take that point. Final question then. You know, is the worst of the worries for Asian Paints behind the company? That's the question, because all the brokerages, etc., now they're looking to turn a corner. We've seen a couple of upgrades coming in after 2 quarters, or rather 2 years of some sort of disruption. Do you believe that the best is behind? Rather, the worst is behind and the best is ahead?
So what we see is that it is a very dynamic game in terms of how we are looking at going forward. We would like to be erring on a cautious side in terms of saying how we see ourselves going. We want to be very clear that we want to stick to our strengths. We want to kind of be very clear on the strategies which we are taking, especially from the point of view of regionalization, the building of the brand, looking at far more stronger execution in terms of what we do, and keep on doing innovation. So we feel that if we are very clear that our strategy is firm, our strategy is clear in terms of going forward, we think we should be in a good go as we kind of look at future.
Okay, so that's the management of Asian Paints, extremely bullish in terms of their outlook, and the brokerages have rewarded them as well. The likes of Jefferies has a buy. They've raised the target price to 3,300. HSBC as well, which has a buy, has raised the target price to 3,050. So as you can see, the stock up around 3.7% in today's trading session. Follow on buying after yesterday's surge that we saw in the second half. We'll take a short break, but a viewer note at CNBC-TV18 Access. We promise you the power of insight. Staying true to that promise, a couple of weeks ago, on the 27th of October, we told you that Mama Earth parent Hanasa Consumer could be poised for a turnaround with a change in the management strategy. Today, investor confidence in the stock has surged after the company reported a stellar set of second quarter numbers. But you would have missed out on the access privilege if you're not yet a member. To receive such insights on a regular basis, become a member of CNBC TV 18 Access now.